Good evening, good morning, good afternoon, everyone, wherever you are joining us from today. Welcome to today's online conversation. I'm truly delighted to have you join us. I am Comfort Eyitayo, your regular host for Connect with Comfort show. On this program, we aim to add value to people on business, enterprise, and personal growth. Each show is organized to feature special guests who are subject matter experts that helps us to throw more insight on the topic of the day. You are most welcome. In a rapidly changing economic environment, one thing remains constant: change itself. And lately, one of the biggest sources of change for both businesses and individuals have been the introduction of new tax laws. For some, taxes feel complex, even intimidating. For others, they raise practical questions. Questions such as, how will this affect my income? Will my business have to pay more? Are there new obligations I must comply with? What opportunities exist within these new regulations? Today's conversation is designed to bring clarity to all this. Our focus is simple but critical: understanding what these new tax laws mean in practical terms and how you can respond wisely and proactively. Whether you're a business owner, a working professional, an entrepreneur, an investor, or simply someone interested in staying financially informed, this session is for you, because here is the truth: ignorance of tax changes is no longer affordable. Understanding them is not just about compliance, it is about protecting your income, strengthening your business, and making smarter financial decisions. Let's take a moment to frame why this topic matters right now. Across many economies, and particularly within developing markets such as ours, governments are expanding tax frameworks to increase revenue, formalize economic activities, and improve infrastructure. While these goals may be necessary, the immediate question for many people is, what does this mean for me today, tomorrow, and on long-term basis? So this new tax law, I can tell you, would influence business profitability. It will also influence pricing strategies, likewise employee compensation, as well as investment decisions. It will also influence your cash flow and even household budgets. But very importantly, compliance expectations are becoming stricter. The cost of getting it wrong is rising, so you cannot afford not to get it right. But here is the encouraging news. When properly understood, that is the new tax laws do not have to be feared. They can be strategically managed. We already have our guest who is going to help us to unpack all these concerns about the new tax law. We already have him in the studio waiting patiently for us to beckon on him. And we will do that right away after this short time out. Please remain connected. We will be right back after this short break. Thank you. Okay, it's like the media are not ready with the break. We can continue with the guest introduction. This new tax law that has been a concern for many is the reason why we are bringing an expert to help us share more insights into it. And I'm especially pleased and honored eh, to bring our special guest of today to you. Joining us today as our special guest is someone whose expertise sits right at the intersection of taxation, business, advisory, and financial strategy. Our guest is Peter Adebayo. Peter Adebayo is a seasoned practicing chartered accountant, tax and management consultant. He holds a BSc degree in from University of Lagos and an MBA degree with specialization in financial management from Lagos State University. He is a fellow of the Institute of Chartered Accountants of Nigeria, ICANN, a certified professional forensic accountant of Institute of Certified Forensic Accountants, Canada, a member of Chartered Institute of Taxation of Nigeria, CITN, a member of Nigerian Institute of Management, Chartered, and alumnus of Lagos Business School, the Pan-African University, and also a registered professional member of Financial Reporting Council of Nigeria. Peter Adebayo, FCA, has over 35 years of experience in corporate and professional practice, garnered across diverse sectors of Nigerian businesses and environment. His areas of professional competence include, among others, accountancy, audit stroke assurance, forensic engagement, tax management, business and financial advisory, entrepreneurship, strategic management, leadership development, administrative skills and office management, management consultancy, public speaking, facilitation and human capital development. You can see we are loaded with our special guest of today, Peter Adebayo, FCA, who was the managing partner of Adebayo Esho and Co. Chartered Accountant, is currently the managing partner of Peter Adebayo and Co., a Lagos-based registered and ICANN licensed professional firm of chartered accountants. He is a highly sought after, versatile facilitator in the knowledge industry, a regular public speaker, paper presenter, featuring in trainings and management retreats, seminars, lectures, workshops, both open courses and implants, including national TV programs, using that platform to give back to the society and contribute his patriotic intellectual quota towards capacity building, manpower and human capital development, as well as social, political and economic advancement of our nation. We are truly privileged to have you today, Pastor Peter Adebayo. You are welcome to Connect with Comfort Show, and we are looking forward to an enlightening conversation. Please join me in making welcome Pastor Peter Adebayo, FCA. Thank you very much for obliging us.
Thank you most humbly and most sincerely, our worthy ambassador, Ambassador Dr. Comfort Olu Eyitayo, MNI FCA OON. I want to appreciate this privilege to come on this show that is fast gaining universal coverage. Thank you for having me.
Thank you very much. Without much ado, we'll be going straight to our interview segment and to help our audience to understand what the topic of the day is about. Setting the stage, what would you say are the most significant highlights of the new tax laws that people should be aware of right now?
Well, just like you said, there are so many highlights, but then I will group them into maybe four principal areas. Maybe the most significant highlights of the new tax laws that people should be aware of at this moment that we are speaking. One is wider tax net. In other words, the desire to expand the tax base, not necessarily higher rates, more focused on bringing previously informal sectors or underreported activities into the system. That's one. Number two, stronger enforcement and data matching. What do I mean by that? Tax authorities are now relying more on banking data records, third-party information, among others. And of course, third highlight, greater emphasis on consumption and transaction taxes, especially indirect taxes that affect pricing and cash flow. I'm happy you mentioned cash flow when you were introducing. And of course, the fourth highlight I'm going to be mentioning is clearer responsibilities for individuals and of course SMEs, in which case we have fewer gray areas, more explicit reporting and filing expectations. So in simple terms, tax is becoming more visible, more traceable, and harder to ignore.
Thank you very much. Many people will wonder why government introduce new taxes or let's say adjust existing ones, particularly during economics sensitive periods such as the one we are in Nigeria. From your
thank you for that question.
No. From your
drive these reforms?
Hold on, Pastor. From your own professional perspective, the question is, what typically drive these reforms? What are the typically the things that drive this reform?
Well, let me highlight three major drivers in as short as possible. And let me allay the fears or misperception or misconception on the part of the audience that this reform is to raise revenue. The answer is no. One major driver is not revenue raising, so to speak, or revenue sustainability. Government wants predictable revenue beyond oil. So that's number one driver. Number two driver is economic formalization, in which case we want to bring informal businesses into the formal sector so that by the time we put them in tax base, they'll be able to discharge their responsibilities. Number three driver is digital transformation, in which case technology will now make enforcement much easier and relatively cheaper. So these reforms are less about punishment and more about modernizing our tax system to match today's economic challenges.
And when we talk of the revenue generation, we can't run away from that. It's also partly to generate revenue for the government because of the various reforms that the government is doing, and they need funds anyway to get it done. So it's understandable. It's understandable if revenue is a key driver. Now, let's look at the impact on businesses, because that's why people are really concerned. What are some of the immediate ways these new tax laws could affect business operations, particularly in areas like pricing, profit margins, and cash flow?
Well, immediate ways these laws will affect business operations. Well, you mentioned, for looking at it from different perspectives. In terms of pricing, I think under the new dispensation, some businesses may need to adjust their prices due to the impacts of indirect taxes. That's on the pricing. On margin, I think non-compliant businesses would more or less see margins shrink due to penalties and some expenses that may imminently become disallowed. And in terms of cash flow, I think taxes may now be payable much earlier, more consistently, requiring a better cash planning. So the bottom line towards addressing these immediate ways is tax is now a cash flow issue and not necessarily an issue that we have to consider at year end.
Okay. So the impact is no more pronounced on cash flow. You have to have a good cash flow management in place with this new tax law. Fine. As a follow-up to that, what mistakes are businesses most at risk of making during this transition? Well, it's no longer transition, but to some people, they still consider it as transition. It has come to effect, but it's early in the days. I mean, the time we can call transition is between June last year till December ending of last year.
Well,
but from the 1st of January,
mistakes
it has come to
mistakes that business most at risk they are likely to be exposed to. Well, there are quite a number of them, but maybe I should just highlight some major, mistakes. One major mistake is to assume that nothing really changes, or to assume that nothing has changed, or to assume that nothing is changing. So until we come to reality that certain things are changing, we may not be exposed to that kind of a risk. So assuming nothing really changes is a mistake that businesses are going to face, that will expose them to risk. Number two, there is an adage that says prevention is better than cure. But for me, my philosophy is not that prevention is better than cure. It is more cheaper than cure. So waiting for enforcement before acting can be a major mistake on the part of business owners. So which I see as reactive, as again being proactive. Then number three, another major mistake in the course of this transition or implementation, as the case may be, is poor documentation and record keeping. The time has come for all businessmen and women to take another look at their documentation system. So if there is a poor documentation system or record keeping, it might expose a business to risk. Then I think number four, maybe I just mentioned about 5 of them, treating tax It's not tax. It's not supposed to be an accountant's problem. But a lot of people see tax as accountant's problem alone, and I see that as an illusion. So that's a major mistake that can expose us to risk. So treating tax as the accountant's problem alone might expose us to risk as businessmen. So in other words, it is supposed to be something that will that will attract the interest of all stakeholders within the business cycle. And of course, the last one I will mention is what is very common, particularly with small and medium-sized organizations. That's mixing personal and business finances. You'll still find out that some business owners will route their business transactions through their private account, and they will route their personal transactions through business account. So there is need for a divorce of that marriage, so that your personal affairs in terms of finances will be separate from business finances, because they are to be seen differently. So most penalties don't come from fraud; they actually come from ignorance. They come from a weak or ineffective system, and of course, ignorance of the law can never be an excuse.
Fantastic. So the compliance is what is recommended to avoid unnecessary penalty that will also come back to affect your cash flow, because that will dip into the pocket of the business. Like it cannot never be overemphasized while we are talking about the impact on businesses. We must learn to keep our documentation intact, and we must learn to separate our personal income from that of a company or our businesses. Let them be separated, otherwise it can cause a lot of unnecessary unnecessary risk. It's avoidable risk. So let's avoid those risks that can be avoided. Thank you very much for that response on that question. Now, we have looked at the risk still on small businesses and entrepreneurs. Small and medium-sized enterprises often feel regulatory changes more intensely because their margins are usually very tight. They do small markup. So with that, what should SME owners prioritize right now to remain compliant without stifling growth?
Well, what SME owners should prioritize? Well, I'm so excited that you are tailoring this to SMEs, because they constitute a very significant aspect of our economic growth and development as a nation, just like it happens, anywhere in the world. So, as far as I am concerned, in my own opinion, I think small and medium enterprises should focus on a number of things, which include the following, among others: bookkeeping discipline, an effective documentation system, even as highlighted. You will find out that a lot of indiscipline in the area of bookkeeping is very predominant, within the circle of SME. So it is very essential that SMEs should focus on basic bookkeeping discipline and effective documentation system. Number two, SMEs should also focus on understanding their tax obligations by size and by sector. Again, understanding this will help them to know what is right, will help them to avoid imminent risk, clearly avoidable. Of course, when we are talking about this risk of exposure to avoidable tax liability. So understanding their tax obligations by size and sector is an area of focus. Then number three, I mentioned this again earlier: separation of personal accounts from business accounts. It is a common phenomenon within the cycle of SMEs. So focus should be on separation of their personal finances away from the business account, so that it will make for seamless reporting and truth and fairness, just like we say in Accounting Palace. So that by the time we are reporting, accounting will the reports will reflect truth and fairness. And of course, focus will also be on seeking early guidance. There's nothing wrong in seeking guidance. But the earlier they seek guidance, the better for them. Majority of them, they seek guidance at the point of emergency. So when emergency comes and they are seeking advice, that will cost more. So I think, in my own opinion, they should also focus on seeking early guidance that will help their businesses to be in proper perspective and not emergency advice that is capable of costing them more. So compliance, I want to say, does not kill the growth of business, but poor planning does kill the growth of business.
Thank you very much. The key word is preparedness. Let's be more proactive rather than reactive, because that reactive stance can cost us more. So we've been told that it's not the tax that will necessarily kill our business or the growth of our business, it's lack of planning, preparation for good tax management. Thank you very much, Pastor. Now, we've actually looked at the business angle and we look at business owners angle. Let us bring it home to individuals, because they are also part of people that we are trying to give more enlightenment to for on this new tax basis. For the average working professionals or income earners, what changes might they begin to notice, either in their take-home pay, deductions, or reporting obligations?
That's talking about individuals now.
Yes.
Can you hear me, ma'am?
Yes, I heard you.
Okay, you are talking about changes that might affect take-home pay of individuals in terms of deduction and reporting.
Yes.
Well, one thing that is very exciting about these new tax laws, I hope I can be heard.
Loud and clear.
Yes, one thing that is very exciting is it's a major incentive provider or burden cushioner, if there's anything like that, for individuals, right? Because they are actually going to pay more. So individuals will notice stricter payee enforcement. Right now, it is very important now for us to pay attention to our returns. For those in employment, those ones are done, the tax payment is done through the pay as you earn system, which is managed by the employer. So the changes that are going to be noticed in their take-home pay will have to be in the areas of their payee. Incidentally, like I mentioned, for individuals, depending on the income bracket you belong to, you're either going to pay nothing now or you just pay lesser than you have always paid. That is one of the things that they're going to notice. Number two, they may also notice on fewer unsubstantiated deductions. Most of the things that before now that we could just smuggle into our computation. Right now, the law does not allow it any longer because there are specific areas of incentives that the law has provided. Of course, you notice now that what we used to enjoy in those days that we call consolidated relief allowance, all those ones are no more. What you're going to be experiencing now, by way of notice, is the development. What do I call it? Yes, development levy incentive, which is the rent, the rent allowance, which is 20% of the rent payable, or 500,000, which is the threshold. Which one is higher? So these are some of the observations that are going to be noticing. And of course, they will also notice more alignment between their declared income now and their lifestyle, because you can't tell me now that you live in Ikoyi or you live in GRA Ikeja, and you're saying you earn 3 million naira per annum. So identify you with a lifestyle is something that's going to expose you to the tax. So there will be need for more alignment now between your declared income and lifestyle. If there's no sync between the two, then you may have questions to answer before the tax authorities as an individual. Of course, there is going to be a lot increased responsibility for self-employed professionals like us. Additional responsibility, more engagements, more advisory services that we can offer those who are in that bracket. So the era of no one is checking me, it's not just ending, it's becoming a thing of the past, as far as individuals are concerned.
That's the catchy word that people are not really paying attention to, and it is necessary for us to pay attention to it. Like some parties, some people go to parties, they have praise singers telling the whole world what they what they are about, how they have houses or Lamborghini and things like that, and you come back and say you are paying 30,000 naira tax. So
and you cannot reconcile.
This alignment is something that you need to watch out for, and that is part of your management and preparedness.
That's
so it's a lot of discipline that this new tax regime is bringing in. Please, media, can you display that question again that we have from one of our? Okay, we have a question from one of our audience, Bayode.
All right.
I beg your pardon, Bayode. Number one, he said, who benefits the most from these reforms and who bears the greatest burden? Number two, are tax authorities better equipped to enforce these laws? And what does that mean for defaulters? So two questions from...
Okay, two questions. Question two, are tax authorities better equipped? I will say yes, but I will say that is not just to say that there are no areas of improvement, because at the point that these tax laws were being considered for implementation, of course, tax authorities at both national level, I mean FRS and the state internal revenue services, they are conscious of the imminent challenges. I mean, for those of us now who are familiar with tax programs, e-services, and all of those things, the activities on the Joint Revenue Service Board and stuff like that, you would have noticed modifications that are being made now with the intention of lessening or reducing the bottlenecks associated, with implementation. So I will say the authorities are conscious, they are aware but then along the line of implementation, where there are areas that require additional attention, of course, I do not have any doubt that they will pay attention to it. But in terms of whether they are ready, I'm not speaking for them, but I can tell you that they are ready with the necessary equipment. And of course, talking about equipment, you don't get equipped today and just stop there. So as more challenges come, the need for more advanced equipment and technology become very, very imminent. So that's question two. Question one. Sorry, ma. Can you give me back the first question?
Who benefits the most from these reforms and who bears the greatest burden?
Well, in fact, as far as these reforms are concerned, with particular emphasis on the private individuals who earn more, they will bear the greatest burden. As a matter of fact, if you look at the contents and provisions of these tax laws, they are more or less tailored towards small income, small income earners pay less or nothing, high income earners pay more. So if you are an individual and you earn more, definitely under this new tax law, you must be prepared to pay more. If you are a large organization under this tax law, of course, definitely you are going to pay more. Even though from small size to medium size onto large size, there are thresholds, for incentives. Of course, when you are still a small size organization, this law provides that if your turnover is 100 million and below, or you have asset base of 250 million, you are exempted from CIT. Of course, but by the time you are a larger size organization, you have to pay more. So the burden is on those who are going to be earning any more, either as individual or as a corporate body.
Okay, thank you very much. There's another one from Ayeni Samuel, streaming from Ikorodu. They are arguably in the new tax law as regards to SMEs in terms of size. Can you throw more light on this?
Well, SMEs in terms of
Ambiguity,
size.
rather.
Well, we can't now automatically now we can't be referring to Finance Act. Under the Finance Act broke sizes of companies into three: small sizes, 25 million and below, between 25 million and 100 million, medium size, 100 above 100 million, large size. But that is no more relevant now under the new dispensation. In terms of size, if you do business and your turnover is 100 million and below under the new tax law, you are seen as a small size organization that needs to be encouraged. And for that reason, no matter what kind of profit you are making, you are not going to be paying CIT to government. And not only that, VAT activities on your accounts are also not things you have to bother yourself about.
Okay, thank you very much. I hope those contributors, Banjo Bayode and Ayeni Samuel, are okay. If not, you let us know. That's a response. Okay.
So if they need further explanation, they can let us know as we go along.
Yes. Now, let us go to, we've talked about individual, we talked about businesses. Let us now look at compliance versus strategy. Many people see tax purely as an obligation. And if you look at those forward-thinking organizations, they treat it as part of strategy. How can businesses move from reactive compliance to proactive tax planning?
How can they move from reactive compliance to proactive tax planning? Yes. Well, there is a saying that failing to plan is the best definition of exactly, planning to fail. I will specifically advocate that businesses should involve tax in business decisions in the earlier part of their business life. So involving tax in business decisions early is a recommended dose, which I see as being proactive as a planning strategy or methodology. So you must involve tax in business decisions early enough. Number two, I'm also of the opinion that forecasting tax must be an integral part of your budgeting. In other words, by the time you are budgeting for a year, you are forecasting or you are projecting or estimating is a particular level of turnover or sales that is to produce a desirable level of profit. At that point in time, you must also be able to forecast a desirable tax relative to the size of business that you are operating. So forecasting tax as part of your budgeting should be seen as a tax planning methodology. Also, using incentives legally instead of paying avoidable taxes, all in the name of tax avoidance, should be looked into. There is this dichotomy, there is this misunderstanding between tax avoidance and tax evasion. So tax avoidance is all about using incentives legally, looking at the provisions and making the best use of them to minimize your tax exposure. It is legal and it is tax planning methodology. So I will advocate that you need to understand the kind of incentives available relative to the size of your business so that I can make the best use of them within the ambit of the law. Otherwise, all this hiding, understating, overstating, overstating expenditure, understating revenue, these are evasive measures. So, but by the time you understand the provision of the law, you'll be able to know the incentives provided. They are provided specifically for taxpayers to make use of so that you can reduce your tax liability. So that is proactive on your part. And of course, it is essential that structures of the business be reviewed periodically in line with growth. I mean, somebody mentioned the issue of whether tax office, whether they are equipped. Equipment of today will not be ready for tomorrow. It's just like, let me just put this way. Our spiritual leaders, they will tell you anointing of yesterday is not enough for today's assignment. So because what is dynamic, there are changes every now and then. So the dynamism within the business space will call for a review of your structure. And your structure is outdated relative to the growth of your business. Automatically, there will be a lacuna somewhere. And at the end of it all, it might result in tax exposure. So I will advise a regular review of structures in line with growth potentials of the organization. So in a nutshell, smart businesses plan tax, but the ones that struggle, they will always be reactive. That is food for thought.
Thank you very much. The advice is be more proactive, have tax planning embedded as a strategy of your business rather than being reactive, which can be very costly. Thank you very much. You know, we are aware there are opportunities even within the law. This may surprise some viewers, but tax reform sometimes creates opportunities. Are there reliefs, incentives, or planning options that businesses and individuals should explore within these new tax laws?
Well, thank you very much, Ma, for that question. And I think bringing a topic of this nature through your platform is a very commendable and laudable idea and effort at this time. Because what your show is doing now is advocating for enlightenment, more literacy within the business space. What people don't know about, they can get to know about it. What they are doing that they should not be doing, they can undo it. I mean, just like we say in the learning palace, you need to learn, relearn, and unlearn. So it is very essential people understand that there are basic reliefs, there are basic incentives that we can adopt as part of our planning options, planning methodologies, planning strategies, to be able to minimize our taxes. And they are there. I mean, there is a saying in those days when they were teaching us a company law. We were taught that nemo dat, quod non habet. In other words, what you don't have, you cannot give. It is the quantum of knowledge that you have that you can make use of. So any knowledge that is not available to you, the benefits associated with that knowledge the benefits are automatically lost. So the commonly overlooked areas, among quite a number of that wants to be capital allowances. Capital allowances are part of the areas where you can get relief incentives that will reduce your tax liability exposure without breaching any provision of the law. Of course, in trying to do, capital allowances are enjoyed from acquisition of qualifying capital expenditure, which is what we call property, plant, and equipment. But then, it is not just cast on stone. This is also taking me back to documentation, because for you to qualify to enjoy these capital allowances as incentive or relief, you must be able to substantiate them with adequate documentation so that by the time the tax authorities come around, we notice that you have enjoyed so much by way of relief or capital allowances. Please, can we see the evidence that these fixed assets have been purchased and they are in use for the interest of this business? The moment you're able to provide that, you can get as much as you can by way of incentives from capital allowances. Apart from capital allowances, the other sector-specific incentives is a function of the kind of sector you belong to. So the moment you understand your sector, whatever incentives that are available or provided by the provisions of the law that affect your sector, you can also make use of them. Of course, there is loss relief. For a company that is starting afresh, there is a number of years that, if you have been making losses, you can carry your loss relief up to a particular number of times until you're able to stabilize. Of course, nobody will expect that in trying to make business, you want to be praying to be making losses. So, but where there are losses, you can relieve them to a certain extent based on provisions of the laws. Now, there's also what I call the enhancement of pension contributions. Pension contributions, that's taking advantage of what the law says. 2004, we had the Pension Reform Act that started 1st of July 2004. That was revised in July 2014. That was what increased the pension contribution by employers from 7.5% to 10%, and from 7.5% employee to 10% to 8%, which means, am I being heard?
Yeah, loud and clear.
Okay. So which means there is incentive that you can enjoy arising from the pension that you are contributing. For the employer, you can decide to do beyond the minimum of 10%. If you do beyond the minimum of 10%, the law allows, in fact, the law actually allows you, if you want to take over the entire 18%, you can charge it to your account, and the law will allow you as an incentive. As an individual, if you want to do over and above the 8%, you can do additional voluntary. The additional voluntary will reduce your take-home pay. By the end of it all, it will enhance your future through your pension account, through the RSA, and at the same time, it will make you pay less tax. In other words, it is possible for you to earn 1 million, and your other party will earn 1 million. But if you do an enhancement of your pension as an individual, you are definitely likely to pay less taxes. So these are other areas of incentives. And of course, SME focused concessions, this is also related to the specific sector incentives. And again, it is very important that we have proper classification of our expenses. It is very, very important. These are some of the things that we need to understand to enjoy relief incentives or planning options as far as the new provisions of the law are concerned. So in a nutshell, many businesses overpay tax. Why? Because they don't ask questions. So asking questions will give you the opportunity to know what is wrong that you are doing, that you're not supposed to be doing. And what you're not doing, that you're supposed to be doing, capable of exposing you to tax liabilities. This is a risk that's clearly avoidable.
Thank you very much. I was just thinking, we had a second program this year that we just had to have a part 2, which we are trying to reschedule. This one is another one because we are not even halfway through our planned interview. But you are giving so much that is necessary to educate our audience that I cannot really rush you, because that's the essence of the show, to be able to provide more enlightenment on critical areas for business owners and individuals. So I'm going to say, if you will not consider us as Oliver Twist, we definitely have to have a part 2 of this session, because we are not even halfway through our interview, and we are enjoying you so much, sharing so much and great insights to this topic. So Pastor Adebayo, on behalf of our audience and our team, we are making a request on this show for a part 2. So because I've been looking at the time, if there's a way I can just plug the time to stop while we carry on, it should have been better, but that one is not possible. So I'm just going to ask you in 1 minute to just give us a parting shot for this session, and then we will call for a part 2 to be able to go through other areas that we have not addressed, so that our audience will have the benefits.
Can I go ahead with my parting shots?
Yes, please.
Okay. Thank you very much once again. If there is a message I want to pass across to you as I leave, I just need to mention that tax is not just about paying. It's about planning and planning early. It's about staying visible. It's about protecting your future. It's an obligation that is statutory. Like I said, people say prevention is better than cure, but according to Peter Adebayo, prevention is not just better than cure, it is more cheaper than cure, because tax compliance is more cheaper than the cost of non-compliance. The cost of non-compliance correction. So the cost of honesty is always lower than the price of penalties. A compliance business will always live well. A non-compliance one will always pay dearly. So ignorance is not an excuse. Ignoring tax rules does not make them disappear. It actually makes the penalties appear. So I want to say thank you, Ambassador, for having me on your show. It's been a very nice time. I look forward to another opportunity on your show. Thank you very much once again. I don't take it for granted.
Thank you very much. I take that as a yes for the part 2, but we will decide at your convenience when we can put that. Definitely we need to do a part 2, so that we can give full education to our people. We've enjoyed you so much. You have shared so much insight. While you were on, we had some of our regulars joining us. We have Bayo Debanjo, who also contributed to the show by asking questions. We have Akinjole Kazim, I hope I got that right, also joined us. Ayeni Samuel also contributed through a question. We have Konyisola Taiwo also joined us, and some others I was not able to pick their name. We appreciate all those that join us today. Like we have promised, and we are hoping we have the nod of our special guest that there will be a part 2, because there are some parts of what we really need to expose that we've not been able to go through within this 1 hour program, but we don't have a choice. We have to conclude the show. So the parting shot of our special guest has been given. We must look at how we would take benefit of all the great insight that has been shared for us. That let us always remember, knowledge is powerful, but applied knowledge is transformational. If we get this knowledge and we do not apply it, then it may not achieve the same purpose. Okay, we have Duro Olojede. Duro Olojede also joined us. So I want to appreciate highly our special guest for today. Let us apply the knowledge we have gained today. Let us apply the knowledge so that we can have the benefits. Like he was telling you, if there are benefits in the law and you do not have the knowledge of those benefits, you will not be able to apply them. So let us apply the knowledge we have gained today to make sure that we get the benefit. Thank you very much. I once again want to appreciate our special guest for doing us so proud. I'm particularly glad that I invited you for this session. And
thank you, our ambassador.
We look forward to the next session.
Thank you very much.
The go ahead for besides that to our audience. Thank you.
With our pleasure.
So I want to
have my words.
Our audience to bear with us. There will be a part 2. If there are still other areas that you want to know, just note it. You can send your own question ahead of time so that we can address them. So that's how we anchor the program today. We thank you for joining us. Continue to connect with us or connect with Comfort Show. Thank you and God bless.
Thank you very much. God bless everybody. God bless the participants, the viewers. Enjoy the rest of your evening.